Splendid evening it is to viewers. Welcome to Equity News and Equity Access, your area perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast from our Hampton studios. I'm Ibn Abunda. Let's get into business. The Institute for Sustainability Africa today held a meeting to address the recurrent deaths of artisanal and small-scale miners witnessed across the country in recent months. Scores of miners have died in illegal mining activities across the country in Bindura, Battlefield, and just 2 days ago in Mazoe. Speaking at the event, Parliamentary Chairperson on Mining, Honorable Darikwa, called upon the Mining Ministry to reduce the high regulatory and taxation costs that miners are subjected to, which often impede the formal registration of small-scale miners with the government. He also spoke of the need to revise miners' forex retention. The government is currently allowing miners so as to facilitate growth of the local mining industry. Our Equity Access team was on the ground. Let's listen in.
What many people don't understand is the cost of mining is what is sustaining Zimbabwe. When a miner exports, just for argument's sake, $1 million US, 500 US straight away is taken by RBZ. That is the fuel you drive around overnight, 24 hours. If that fuel was not supported by the exporters, nobody would be driving up and down. But so it's a role the mining sector is playing. But for that to happen, the 50%, there are certain arrangements which are needed depending on the level of growth of that particular company. It must be allowed to say, okay, you are starting, go to 70%.
Miners also lamented the 50% forex retention that miners are being allowed by government, as it is impeding miners' capacity to grow and recapitalize. Once again, let's have a look.
Because vertical growth is beneficiation. When you export a raw mineral, you're supposed, as a company, you're supposed to have objectives of buying value addition equipment. That's growing from primary production to secondary production. So I had wanted to propose to everyone, all these regulators that are available, that considering that the Zimbabwean economy and its constitution, it was designed for corporations. A good example of a corporation is INSCO. INSCO has got a lot of downstream sub-business companies that bring back revenue to their holdings company. So with that background, I'm proposing to honorable members that we need to revise our policies and come up with policies that foster integration of small-scale private players for them to be working hand-in-hand with the government, so that there will never be this tug of war where you're telling me about the good news that our forex, the 50% that you would have retained, is buying fuel, and yet on our side we're like, when I'm supposed to buy this much of equipment within 24 months, the government is biting the very same hand that is supposed to bring back, or that's supposed to bring bread and revenue into the company.
In other news, diversified financial services firm Old Mutual Zimbabwe Group shareholders have approved for a major restructuring of the group at an AGM held in the capital this afternoon. The group will now have 3 units, namely insurance, wealth management and banking. This resolution was passed at the group's annual general meeting held in the capital this afternoon. Old Mutual Zimbabwe Limited will remain as the holding company of these 3 clusters. The exercise is also intended to streamline the ownership of Old Mutual Insurance Company. It is expected that this will result in a reduction of the legal entities of the group. This comes following major restructuring in the parent JSE listed Old Mutual Limited, which saw it exit the Americas as well as Asian market. Let's just have a quick look at the stats to see how the corporation has performed, as well as what perhaps we could expect going forward. This is how the corporation has operated over the past. This is 2014, where they recorded a revenue of $192 million. 2015, 203. There's a growth in 2016 to 445, which is almost double what they recorded in 2015. Meanwhile, there's also been more than a 5 times growth in profit after tax, from $13 million to $91 million. 2017 PAT of $219 million against revenue of $991 million. 2018, the figure there is of course $300 million in terms of profit after tax. This is, of course, how the corporation has operated, making progress in terms of the contribution to revenue. This of course would represent what has actually taken place. With regards to banking, which is the CABS, has contributed 8% in that regard. Then of course fees and commission as well as service income 6%, investment income, which constitutes the bulk, or what you could call the wealth management unit of the corporation, raking in 72% of the revenue actually recorded. The net and premiums constituting 14%. Chief Operating Officer Mr. Isaiah Mashinya gave a trading update. Let's listen in.
Up to the end of March, it is worth noting, however, that the market has since recovered in April up to date, and it looks like this trend could continue. Performance across our core operations has remained resilient, and after normalizing for the impact of transitioning to the new currency regime, profits have been in line with the expectations. Expense growth was managed to levels below the year-on-year inflation numbers released for the first quarter. We believe that the group business will continue to perform despite the economic challenges being currently experienced. We continue to stay close to our customers and to market developments, and our capital base remains adequate. I thank you.
Meanwhile, JSE listed miner Sibanye maintains 2019 outlook as Q1 production drops. This is according to a first quarter report given by the group. Sibanye is an independent mining group domiciled in South Africa with a 50% joint venture partnership in Mimosa, a PGMs operator in Zimbabwe. In an operating update, CEO Neil Froneman said guidance from the SA PGMs operations, which includes attributable production from Mimosa, remains unchanged at between 1 million ounces and 1,100,000 ounces, while capital expenditure is forecasted to be at $103 million. As we make progress, transport and logistics company Unifreight Africa Limited posted 2018 financials reporting an 18% growth in revenue to $27 million. Chairman Patrick Chingoka said net cash generated from operating activities increased by 57% to $3.6 million from $2.3 recorded in 2017, and this was spent very well productively in 3.2 million purchase of new revenue earning equipment, and as well as 0.8 million repayment of borrowings that had been employed in the purchase of revenue earning equipment in prior years. The board recommended the declaration of a total dividend of 400,000, which the company said a separate announcement will be made giving the details of the payment. We just get, of course, into the statistics to see how the corporation has actually performed in recent years. Now, taking it back from 2014, revenue of $29 million, which has dipped over the years right up to 2017 with regards to revenue. There is, of course, profit after tax, which is in the negative, which is actually a loss rather in 2014. The loss widens in 2015. There is an improvement from 2016 because they actually recorded a profit after tax. 2017, the upward trajectory is maintained, but there's a slight dip where 2018 is concerned, while also there has been an increase in profit after tax. Then, of course, Sable Chemicals and Invictus Energy have signed a memorandum of understanding that could see the supply of natural gas to Zimbabwe's sole ammonium nitrate producer should a commercial gas discovery be confirmed at Invictus Kabora Bassa project. Under the MOU, Invictus would supply up to 70 million cubic feet of gas per day for 20 years, which would be enough to sustain production for Invictus while meeting the needs of Sable Chemicals plants. And of course, the votes are coming in for South Africa, which is Africa's most advanced economy, while at a point of 58% of the vote tallied to this point, ANC leading at 56.9%, the Democratic Alliance at 22.9%, and of course the Radical EFF at 9.6%. Well, this concludes our news bulletin for the night. Up next is Markets Daily. Please stay tuned. Welcome back, viewers. It's now time for Markets Daily, and with me in set is Anesu Chumbumo. Anesu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
Can't want to complain, should only get better yourself.
All right, as we quickly get into it today, the demand on the stock market was pretty much firmer today, coming up 464% in terms of the volumes traded to about 21 million shares that were traded, which translated to about $8 million that was exchanged among about 33 counters that exchanged their hands today. Now, within that 8 million, there was 47% of that 8.3 million was attributed towards foreign sales, showing a huge foreign sell-off there for the trades of the day. Also, yesterday, foreign sales pretty much dominated again, which then pretty much shows that our local demand is the one that has been currently firming up, even though we have a foreign demand that is around about 22% in that regard of the 8.3 million. Now, with those statistics in mind, we then realized that the stock market did go up again for the 15th session running now. Yesterday, I did mention it was 10. It was my miscalculation. Apologies to you viewers for that. But as we continue on to today, the mining's index is up 2%, 2.04% for it to settle at 187.09 points, while the top 10 index is up 0.5%, even though we had 7 counters in the green in that top 10 index, while 2 counters were pretty much laggards and 1 was very much stable. Nat Foods has been a very stable counter as of late. It hasn't made much oscillations on the stock market. The all-share index did go up 0.79%, while the industrials index settled at 467.77 points for it after having added about 0.76% to its level. Now, week to date is pretty much all green, 3.16% and 3.17% ahead on the all-share and industrials index. Like I've just mentioned, those are the numbers. Mining's index is now in the positive on a week-to-date basis, up 1.18%, consequent to the 2% jump today. Now, Bendera Nickel has had some constant demand that has been placed on it as of late. It has had about 4 sessions running now with a constant volumes being traded in that counter respectively. So I would suggest that they could be gaining much more traction in terms of their investors. We wouldn't really know what is the sentiment there unless we then have a deeper dive into and look into how it has performed. The top 10 index was up 2.62% on the 5-day trend. Now, Dairyboard did lead a pack of about 16 counters actually 21 counters that were up on the stock exchange versus 4 counters that were down. They would add about 15.19% for it to settle at 16.3 cents, while Dawn African Sun, those 2 companies are related, with African Sun being in the loosest term lodges of Dawn Properties. Dawn Properties has a lot of hotel properties that are spread out the country, where African Sun then rents out for it to use for its operations. Bendera Nickel, like I mentioned, has had a very good run in terms of demand on the stock. It has come up 8.55% for it to settle for 5.97 cents, while NMB, which is a banking stock, is up 8% for it to settle at 27 cents. Now, ART was at the other end of the yardstick, coming off 1.79%, while Sipco, Econet, and Exia did cap the set of laggards today, coming off 1.73%, 0.42%, and 0.19% in that respective order, for Exia to settle at 42 cents in today's trading session. Now, for our forex market, the parallel market rate has pretty much stayed stable again at a rate of about 4.9, while the interbank rate has continued on its weakening path, coming to 3.31. There have been some rumors around town that the central bank has pretty much has actually injected more hard currency in terms of bond notes in the market, almost close to about $12 million worth of bond notes. These rumors are still yet to be confirmed. It could be one reason that we should expect for the rate to actually weaken further. Now, the reason that was to do with the $12 million has much to do with the tobacco farmers that are on the trading floors at the current moment. For Old Mutual implied rate today, it settled at 93%.
Thank you, Aneso, for the insights. Thank you, viewers, for staying with us. Don't forget to like, subscribe, and follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From the Equity Access team and I, Danke, and adios.